This is Rod Kusin, Spooman for Risk for Wednesday, November 10th, 2010. All times in the chart are Central Standard Time. What a day. Beautiful green day up. And if you've subscribed to our system, you know what that means. Let's look at a couple of things. Our retracement lines today, over 93% accurate. And look at this. As the market shorted into the low just past 9 o'clock today, what didn't our traders see? They saw no retracement lines below the market. All they saw was retracement lines above the market. And with that in mind, what does it tell us? With over 90% probability that retracement lines are going to be hit, that means that this market, in all probability, will rally. And rally it did. Very interesting. Now, what will it do tomorrow? In all probability, it will rally again. Now we have that retracement line down here at 1203. That'll get hit. But it may be filled before the open. And if that's the case, then we have retracements that are still in existence above the market. We'll just have to see how that goes. But at the moment, our calculated bias indicates that on Thursday, the market will probably rally again. Now, it may short and have some good shorts, but that's what the bias is suggesting. The best trades tomorrow, as far as we can tell right now, and it is Wednesday afternoon, at least for a portion of the morning, it appears as if the market will rally based on our calculations. Now, let's look at the pivot strategy. Oh, and by the way, before we do that, just another real quick examination of our PowerPoint. The premium strategy has three primary settings: a pivot, divergence, and a trend setting. The pivot and the divergence is designed to get us into major intraday pivots. The pivot setting has very precise settings, and if they fail, divergence will usually pick up those opportunities, and if it fails, then we try to move into the trade based on whatever the trend happens to be. So that's why we have these three different approaches. Our retracement lines, as we mentioned today, better than 90% accurate. We provide you with a warning indicator. We tell you what the bias is even before the open, and what the best trading levels are off of the premium for your most profitable trades. Now today, we're using the pivot setting here. The pivot setting basically sets these three fields to true. We're using an overbought, oversold threshold on an SBC 3 and 10. And then we added one little thing. We wanted the trades to be in agreement with the volume indicator referred to as the tick of the U.S. exchange. This takes into consideration the tick of all of the exchanges, the NYSE, the NASDAQ, and so on. All of the exchanges built into one. And we want to know whether the tick is up or down at the time that we're trading. So we add this little field And notice the accuracy of our long trades. The first set of long trades happens here. Now it's right at the pivot, so plenty of an opportunity to tighten your stop. The market moved up. Okay, the market moved up, but we had a retracement line form as it did. So now we have a very high probability it's going to come back down, which it does. So no reason to take any risk on this trade. This is not a losing trade. You already have plenty of information to tighten the stop. Now it happens again. We get long trades in here. They don't go very far, but we have plenty of an opportunity to tighten the stop if the market begins to turn, which it does. So no loss on that trade either. And then at the bottom of this move, another long trade. Now we only set the trade to take an 8-tick profit. However, given the information that we have, it would have been far wiser, all right, to just let it run and set the profit target to hit one of the retracement lines. It makes a lot more sense to do that. A profit target is not a technical reason to exit the market. It is just when a price is hit. It is much better to have a technical reason. Our retracement lines are based on very technical situations that exists in the premium. So using the profit target is using the retracement as the profit target is in fact a technical reason to exit. And instead of making 8 ticks, you could be making 8 points, because there we've got retracement lines up here at 12.12, 12.13.75, 12.15, and the entry is happening here at 12.01.75. That's the low. So even getting filled at 12.02 or better, you've got more than a 10-point move here. So profit targets, that's nice. Use the retracements as a better approach. Those are the only long trades we had in the morning. And in fact, we had no other long trades using this setting during the course of the day. The only other long trade that we had using either the pivot or the divergence setting occurred based upon divergence that happened during the noon hour. So let's go to the divergence screen. Okay, so here we are using the divergence strategy. Here are the settings. Right here. It's very simple. And the only other long trade occurs right here, right after 12 o'clock. No other long trades, and the market just continues to rally up. Nice. Look at that. Right down here at right around 12.07 and a half, right in that neighborhood. You've got 12.12 as a retracement. We get a short signal in here, however, but that's above. In fact, that short signal is at 12.14. Wow, nice. And there's the equity curve. I like this new strategy. I love it. Okay. Oh, yeah, let's talk briefly about the tickets. We set up the symbol $TIKUS using a 20 tick bar. We do that so that it's more in sync with the strategy. And we also set up one of our indicators so that it tells us whether the tick of the exchange is positive or negative. And that's why you see green and yellow lines, or green and yellow bars here. But if you wanted to get a bigger picture of what's going on, you can set this, say, to 100 or maybe even 200. I'll just set it to 200. And there's your whole day. And it's nice to know where the extremes are. Because when you know where the extremes are, you get a pretty good idea as to where the market, or what the market is going to do when it hits these extremes. And we have a way of calculating that too. But yeah, real nice, real nice. So you can see here's a perfect time to go long, and we did. Another time to go long was late in the day. That didn't work out too well at 1420. Let's just line that up. So right in there, this is 1418, and the tick bar closed at 1420, but it hit its low right in here. So that was a good time to go long. Not a lot out of that trade though. And as we warned our traders, based upon pattern, you need to be shorting this because the pattern of the day had already been filled and we had retracements below the market. So it was a good reason to late in the day to be short, not long. Your high occurred too early, and once you passed 230, the probability that it was now going to hit another new high was substantially reduced. Could happen, but pattern says the high should have been prior to 230. It was. So after 230, your best trade would be short, and that especially because we have retracements below the market. And as you can see, it really tanked. All of this we teach in our course. We teach you how to trade. And this is good stuff. Really, really good stuff. So that's our video for today. We invite you to come to RSKsys.com, ask for a demo. We'll spend time with you, one-on-one. We just talked to a trader who called us from Argentina today. It was a very, very nice conversation that we had, and we probably spent, I don't know, hour and a half with him to help him see a little bit more about this system. So we want you to succeed. We want you to have a good, reliable, consistently profitable trading system, and we've got one for you. So give us a call, ask for a demo. We'll be happy to help you out. This is Rod Kusin and Spooman for Risk.